for the other investments I did that didn't cash flow, the private lending literally paid off those other opportunities. So it'll be like a nest egg when they mature, because it's always been more than I've actually needed. So I just keep the money out there working, and I don't just go out shopping. Like I've just used it to pay off other investments.
Welcome to Real Talk with Gary. If you are listening to this show, that means you are either searching or ready to make a financial change in your life. This show is not only about real estate investing, but also the importance of mindset and the roadmap to a better, healthier life. Learn the daily routines of successful entrepreneurs and the latest market strategies and trends to stay ahead of the curve. Ready for some down-to-earth, north of the border Canadian talk? Here's your host, Gary Hibbert.
All right, welcome back. And today I've got Serena Holmes, and very interesting conversation. She was the owner of an event company called I think it's called Tigress. And essentially it was an event staffing and management services. And she managed that for like over 18 years. And now just before COVID hit, she was trying to sell it and unfortunately wasn't able to, and got stuck with the company. And it took a huge beating. And so that really started her journey. Now, I shouldn't say started, because she had invested prior to that. But I think really what it did was it allowed her to focus more on real estate investing and private lending and digging deeper into this space. And so since then, her investment journey has really exploded. She's also now the host of her own podcast show. She's moving into the multifamily space. She does, like I said before, private lending. And we dive into the importance of mindset. And she's also the author of a book called The Accidental Entrepreneur. And then we also dive into to mindset as well too. And listen, with everything that's happening in the world today and with the economy, with where it is, it doesn't mean that has to reflect your economy. Yes, I get it. It is winter out there. Some people are having some difficulties, but it doesn't mean that you have to have difficulties as well. There are things that you can do. You can manage your thought. You can turn your shoulds into must. And, Serena and I talked about this, is that the secret to this is giving back to your community, giving back to the people that are listening to you and following you. But you've got to put yourself out there. You've got to get out there and network. You've got to, go into the social media, post videos, share other people's articles or things that you see that's helping you that you think may help other people. All right. So listen, I'm not going to ramble on too long on this intro, but I think you guys are going to enjoy this particular show. Serena's awesome. And I'm going to be on her podcast soon as well too. So with that, sit back, relax, and I will talk to you guys next week. Take care. Today's show is brought to you by McMurder and Associates. McMurder and Associates is a real estate and estate law firm who can be your legal partner for every major event in your life. If you are planning your estate, selling or buying a home or an investment property, they can definitely help. With over 30 years of experience, the firm's objective is to prevent you from worrying about the legal aspects of your transaction. From the beginning, McMurder and Associates will provide you with straightforward legal advice and a no surprises policy where you won't be hit with a legal bill you did not expect. Good morning, Serena Holmes. How you doing?
Good. How are you?
Good. Thanks for coming in.
Thanks for having me.
Yeah. How's life?
Good. Can't complain.
Yeah. How's real estate with this interesting market that we're in?
It's been interesting.
Yeah.
Yeah. I had some clients earlier this year that made me question why I got my real estate license.
Really?
Followed by a really lovely client that reaffirmed that there's good people in the world. So I guess it all depends.
Okay. What do you mean though? How did they make you question?
They were challenging. Like they were a couple that was separating. Yeah. And
that there alone is challenging.
That in itself is a challenge. So I was advised by someone that specializes in that type of clientele, keep them on a WhatsApp group together. So all of the communication's very smooth. And the challenge is that the husband's a bit of an over communicator. So early on, the wife's like, I don't want to be on this group. And then she's like, I don't want to hear about anything till it's in writing. And so, I would wait to talk to her about stuff. But then if he talked to her, it would create issues. So I think it just it's challenging. Like she was very negative. I think mental health played into it towards the end. She was, swearing at me here and there. Like it got tough. And then he liked to talk a lot, like every day at 5:00 for a half an hour to an hour, like wanted to analyze every newspaper article he came across. So it was tough. And when they went to market, they had an expectation a few $100,000 above the comps. And by the end, we actually got there. And on the last day of the listing, got a Hail Mary offer and they just shut it down. So it was 4 months going through all of that with them. And, I thought, okay, we got it. We could finally, we're here. And then the wife kind of shut it down.
Now, do you practice a lot of real estate?
I've done it more part-time for the last couple of years, just because my daughter was still quite young. She just started kindergarten last week.
Nice.
So I was trying to prioritize
That's such a fun age,
family.
is it not?
Exactly.
I almost want to go back to it, but maybe not. Maybe grandchildren.
Yeah, absolutely. So it's a lot of work.
Yeah.
But she's going to be our one and only. So I just really wanted to have that work-life balance in this past couple of years and have that time with her, like a lot of time at the cottage and stuff like that. So it's been a little bit more part-time for the last year and a half. And now I'm at the point where I'm ready to do a lot more.
Yeah. And it seems like you've done a good job of creating that balance of work and play and family. So why don't we get into your journey? Because you haven't had the easiest journey either, have you? Like there's been some ups and downs and curveballs thrown at you, but you've done well to hit them out the park. So why don't we dive into your story? Like, why did you get into real estate investment? Why did you get your real estate license?
Yeah.
And how has your journey been?
Yeah. So I actually had my own business prior to getting my real estate license that I had for 18 years. And I actually tried to sell it right before COVID. Not that I knew COVID was coming, but just that I had built it up to a certain size and I was expecting my daughter and kind of lined up that the girl that worked for me for 6 years would take over as my mat leave replacement for a period of time. And she resigned when my daughter was just 2 months old. So I hit the panic button. I was like, how do I manage a business with 10 full-time employees, 2,000 part-time across the country? We're a very high volume. And I hired a mergers and acquisitions company to sell the company. And then we went into lockdown 2 weeks later. So I couldn't easily do that. So you sold it like
literally right at the right time?
No, I listed it then. So I wasn't able to sell it prior to that. So we had, I think, $300,000 in our book business that disappeared, $1 million in our pipeline that went up in smoke. And, we couldn't operate for about 6 months. We'd come out of lockdown, do a bit of work. And, it was just that roller coaster during COVID for those 2 years. And then coming out of it, the one full-time girl that I kept, and again, having my daughter at home, I wanted someone that could scale up for us when we had work coming in. And she resigned. So I knew we're going to get busy really quickly if all the restrictions are lifted. And I no longer have an office. I no longer have a head office team. Do I have it in me to actually go back to where we were and scale back up that fast? And I just felt that I couldn't. So
I might have missed it. So what was the business?
It was all event staffing and event planning.
Oh, so they got crushed.
So we got crushed and we really couldn't diversify into something else. It just wasn't the nature of our business, where some companies went and did virtual conferences. That just wasn't what we did. So I basically got a mutual release and I spoke with 15 agencies in Toronto. I got 4 offers and had it sold in 2 weeks.
Okay.
So after 2 years of trying to sell it during COVID, sold it in 2 weeks. We closed actually on Valentine's Day, 2 weeks after that.
What was that like going through it though for those 2 years?
Yeah.
Because it was ups and downs and we're opening, we're closing, we're opening, we're closing, kind of opening. And
it was a lot of, we went from being very, 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 very busy to, hundreds of emails a day to sometimes a couple. And we were still quoting on things with people thinking when we do come out of it, what will that look like? But then obviously the government would keep on changing things on us, right? So we got a little busy during the fall, but we shrunk by 90%. And I mean, at the end of the day, we actually came out of it in a little bit better shape than we had going into it because we took advantage of government grants. I cut a lot of our spending, things like that. Yeah. But it was just, going with those ebb and flows. But shortly into COVID, I think it was 3 months in, I decided, I have more time right now. And yes, I have an infant, but I have more time than I ever had. So I'll do 2 things. And one was getting my real estate license. And then one was publishing my book. So I thought I'll rotate between courses and editing and get those things done. And I was able to achieve that in about a year time. So I used the time wisely.
Yeah, because you wrote a book called The Accidental Entrepreneur.
That's right. Yeah.
Yeah. Okay. Tell me a little bit more about that book.
Yeah. So it was something that my whole life, people had always said to me, your childhood is so crazy. You're going to have to write a book about this one day. And I actually ended up signing up for a real estate education conference. And I met a woman that was selling a writing retreat. Always wanted to write a book. So I ended up going to San Diego for a few days and I hammered out about 70% of the book and then finished it. And then I hit a wall when it came to publishing. So I just shelved it for a little bit of time and then came back to it during COVID, found a publisher, went through all the editing and got it finally published.
So did you write it yourself or did you have a ghostwriter?
No, I wrote it.
So you wrote it yourself?
Yeah.
And how long is this book? How many pages?
It's 31 chapters.
Okay.
So it literally starts with, the crazy things that ensued in my childhood, but ultimately how that paved the path for me as an entrepreneur and what made me kind of scrappy and always taking those opportunities and, trying to just get by and how that survival skill kind of led itself to entrepreneurship.
Okay. So that book then is your story, your journey. You started that business.
I didn't start it. Yeah.
You didn't?
No, I started as a part-time brand ambassador. And then I came on board as management early on, and the woman that had founded it offered me partnership. And then she left 4 years in. So I bought her out actually during the recession in 2008.
Okay. So you had it for quite a while then. You had it for 12 years
18
almost?
18 years in total. So 4 with her and then 14 on my own.
Okay, got it. So then you wrote that book, talked about your whole entire journey.
Yeah.
You got your real estate license during COVID, and then you got into real estate investing as well too.
Yeah.
Okay.
Yeah, the real estate investing went back a little bit earlier. So I guess it was 2012. I hired a business coach because I felt like I'd been winging it for 8 years. I'm sure there's
like my life sometimes.
Lots I don't know. I'm sure everybody feels that way, right?
Yeah.
So I hired a business coach, and there was 2 major takeaways. One was to look at my numbers and my metrics more closely, and to manage a dashboard to understand, what our margins were like, what our closing ratio was and stuff like that. And the other half was, she said, you should really consider investing some of your retained earnings because you have more than what most business owners operate with. And I learned then that most operate on 3 months, and I had about 18 months. So she's like, you have more than you really need. So try to find a way that you can put that to use because it's a waste in the bank. So at that time, I ended up buying a short-term rental in Florida because the dollar was par and I could pretty much buy it for cash between what I had in the business, my home line, and I think my TFSA. I just combined all of it.
Yeah.
And
that was such a short window when it was
short
par.
window. So that was 2013.
I thought about it and I was like, I should buy a lot of money right now or US dollars. And I never did,
that would have been the easiest thing, right? Because you'd make 40% on it.
I know. And I'm waiting for it to come back.
I know. So hopefully eventually. So that was my first experience doing it with no experience, no investing, education or anything like that. Kept it for 4 years. Obviously the dollar shifted, the market shifted. So I did well with that. And then I was like, what do I do now?
Okay.
So
what were you doing with that property? Were you doing Airbnb?
At the time it was more like vacation rental by owner. For some reason where we were Airbnb I never got one booking from them, but we did a lot through VRBO.
Well, was Airbnb around back then?
It was.
I don't remember.
Yeah, maybe just not popular with snowbirds.
Okay.
It was that demographic that would come down during those winter months and stuff like that. So
right. Okay.
Yeah, so it was fine. I learned a lot through that process and I pretty much managed it myself. And then we had family and family friends that would help, book cleaners and check up on it and if there was a repair to do or anything like that.
And was it a nice steady flow of...
No, it was vacant a lot. Our realtor was like, this will be booked all but 8 or 9 weeks of the year. And it was the opposite. January to March, always booked, could book 3 years out. And then it was vacant a lot from April to December, unless we lucked out and got the occasional person that came in for different reasons. Mm-hmm. So yeah, like I said, it was kind of a learning and it didn't really cash flow positive during that time. So that's why after the 4 years, I was like, okay, it served its purpose. I'm going to double my investment just based on the dollar and the market and stuff. So it made sense to sell it at that point.
Now, did you get financing down there up here or did you buy cash?
I got turned down in both places. So I really had to buy it for cash. There are options now, but there weren't too many back then.
Yeah, because they made it very difficult for Canadians to get financing in the U.S. after that crash that happened.
Mm-hmm.
They became very, we'll say, conservative.
Yeah.
Right. With lending money. But yeah. Okay.
Yeah. So I got the answer from the bank, I think 2 weeks after my closing that I was denied. So I think we put the offer in at the beginning of April and it took that long to even hear back. So obviously my plan was to buy it for cash anyways. But I did explore financing to see if that was an option.
Well, it's a good thing you were able to buy it for cash. Because 2 weeks before closing.
2 weeks after closing.
Oh, after closing. Eh?
Yeah. Good luck. So it was a learning experience in a number of different ways, even just getting your ITA number and going to the consulate here in Toronto and filing taxes in each places, and then the web of bank accounts to move money around based on how you receive it. And shifted around to pay bills and stuff like that.
Okay, so you did that. You held that for what, a few years?
4 years.
About 4 years. Okay.
Yeah.
Now, did you buy any other investment properties during that time or after that time? And
No, that was kind of like the main one at that point in time. But when I sold it, I didn't know what to do, but it worked out that my business was staffing events for Keyspire in Texas and Florida. And at the time, I didn't know what Keyspire was. And then I went to their wealth tour, and then it led into their 3-day event, and then it led into their membership. And it's a very costly membership. So I was like, I can't sign on the dotted line without doing a bit of due diligence. And I just tried to find some people that indicated that they were with Keyspire either on like Facebook or on LinkedIn. And I found a woman that was the mother-in-law of one of my staff. And it turns out she's literally like probably their biggest success story. Like she's gone from 9 properties to at that point 50 something. Now she's in the hundreds doing capital raising, like all kind of stuff.
Okay.
So she really validated like it would be worth it if you're ready to take action, and you'll make the money back probably in a few months. And ultimately I did.
Okay.
So I did a lot at their first investor summit, and things kind of continued from that point.
okay, so then kind of walk us through that. So you joined, and then what? Did you start buying numerous investment properties? How did that journey go?
Well, I think looking back at the time, like they didn't really talk about multifamily the way that people talk about multifamily now. So if I knew then what I know now, I would have taken the time to go into multifamily. But instead I bought 2 pre-construction properties at their investment summit.
Okay.
So one I kept and tenanted, and then one I planned to sell on assignment, which I did. And then I also invested in a few syndicated mortgages and a land development deal. So I did a whole bunch of stuff. And then I was talking to a friend about it, and she's like, you should really talk to my mortgage broker. I do a lot of private lending. And at that time I didn't know like how big that would become for me. But now 5 years later, I've done close to 70 deals. And that's really what's saved me during COVID. And
right. And when you say 70 deals, you're talking about private investing.
lending.
So now you're lending your money out. Okay.
Yeah.
Okay. So this back up just a little bit, 'cause I do want to spend some time on the private lending. So you did some land development. You bought some pre-construction.
Yeah.
What happened with all this? Did you sell them all? Did you keep any of them?
Yeah. Yeah. So the condo that I bought in Langley, I sold on assignment. It took about a year longer than expected. So that kind of got finished. I think I sold that now a year and a half to 2 years ago. And then I kept the property in Edmonton for close to 4 years. And I just sold it middle of last year. And my plan was to move into multifamily. So I put in an offer on a multifamily property in Cape Breton with 22 units across 6 properties. So it was like a package of properties. And at that time, it didn't, I guess the seller didn't feel confident with me because I hadn't flown out there to see the property, and gave it to another buyer that had actually put in an offer for less. But I figured like I would go out there for due diligence. Like I'm not going to just fly all around just for different things. So I took that as a sign, like interest rates are raised, like going up. Maybe I should take this next year to just learn more, educate myself on what options there are, like started exploring a lot of different things, and, you know, joined a mastermind and some other things. So I just ideally I'm now at that point where I'm a year in. So I've become more clear on what I want to do. And I'm just kind of working towards that plan now.
Got it. Okay. So you got into private lending. Mm-hmm. Why private lending? Did somebody introduce you to it?
Yeah.
And like you said, it got you through COVID, which I assume was because of some cash flow.
Well, because my business couldn't operate anymore. So I didn't want to obviously take money out of the company during that period of time. So I was able to use my home equity line of credit, which at that time was 3%, and then loan it out anywhere from 15 to 20% to people that needed it for different reasons. Like it could be for real estate investing, it could be for renovating properties, it could be for, you know, maybe paying off a line of credit before their property closed because they couldn't have any debt in advance of closing. And, you know, through that mortgage broker, I was able to do, you know, maybe 3 to 5 deals a year. And at the beginning of last year, I wanted to scale that up. So I reached out to the Keyspire community where there's just constant deal flow. And a woman reached out to me and just gave me this list of all the people that she'd worked with, that she was confident with and had a good relationship with, and just set up discovery calls with all of them.
So let's do a quick math on that then. I don't want to get out of the screen here. Maybe do it on your phone. Let's do a quick math. So somebody who's listening, do you have your phone on you?
I don't actually.
You don't? Because I know
but I could probably wing it off the numbers.
Okay,
yeah.
so let's say now, so somebody's got a line of credit.
Yeah.
Okay, and you're talking about when it was 3%. So let's say now, what's interest rate for?
Now it's like 7.8. Say 8.
Okay, so we'll say 8%. Okay, so then now you're using borrowed money. So you're borrowing the money from the bank.
Yeah.
And then you're now lending it out to whether it be a real estate investor, it could be a family that needs like a second mortgage. Maybe they're going back to school, or maybe they need to do some renovations, or whatever the situation is. A whole bunch of different type of situations that come up that people need funds.
Yeah.
You then have a mortgage agent. Just walk us through this.
In some instances, there's a broker.
Yeah.
So I've worked with 2 brokers now. One is very like real estate investing specific, and then the other broker was just random different reasons, or it could be direct to the actual companies. So it could be a land development company, a real estate investor that's burring multifamily properties or single family homes. So it was kind of a mix of those.
Right.
Yeah.
Okay. So then now your mortgage broker calls them and says, "Hey, Serena,
Yeah.
I got a deal for you.
Yeah.
You can make about 16% on this.
Yeah.
Now you're taking your line of credit that you pay the bank 8% on.
And it's tax deductible on your income.
I love that. People love
Yeah.
that. Okay. And so essentially you're making that spread.
Exactly. Yeah.
You're making the spread on free money.
Yeah. Yeah.
And you're getting that cash flow. And now how often do you get that cash flow?
It's usually monthly payments. So not always. Like if it's a bridge line or something like that, it could be defined as like 2 weeks later, 6 weeks later, whatever it may be, or even interest only during that period of time. But usually it's monthly payments.
Okay.
Yeah.
Now, do they ever pay you upfront? Like the full amount? Like let's say it's a 1 year term. Do they ever pay you upfront?
So the only time I've seen that was with the syndicated mortgages that I did. They had split the interest. So 16%, but 8% paid monthly, or for the first year you could get in full upfront. And then 8% is on the back end when it matures. So that's the only time I've really seen that. I have seen investors offering that though.
Got it. Okay. Is this something that you just want to continue doing, the private lending?
Yeah, I think it's been really, really good. Like I said, I've done about 70 deals, and this is the first time that I've experienced some things with like delays on payouts, for example. I had one circumstance where one borrower defaulted, and then things have gone like a little bit crazy. So it's in litigation right now. And, I'm confident with the outcome because of the due diligence I did up front in terms of where that's going to go. But I think the economy is kind of in a weird place. There's a lot of crazy things happening. So I think you just have to be extra careful. I think I would be a little bit more particular about working with people I know personally now, as opposed to necessarily brokering it through someone where I don't know. So I'm just going to be probably a little bit more careful now based on how things are in the world.
Yeah, for sure.
Yeah.
Okay. So let's talk about due diligence. Like what type of due diligence are you talking about?
Yeah. So with the one broker, for example, I've done probably 25 deals with him in the past 5 years. And he sent me a deal for a borrower that I've actually worked with in the past. And the deal was written in the way that if they defaulted, I could put a lien on a property. It was the same property that's on his identification. But as a realtor, obviously I've got access to different tools. So I looked him up. He's not on title. His parents are. So obviously I went back to the broker and I just said, he's not on title. Like this holds no weight if he defaults. So the parents have to be on the agreement to guarantee it if anything goes wrong. And things have gone wrong. So ultimately, like the parents are in the mix with that. But I do have leverage. I have, put a notice on the property. So that will ultimately be like how I'll get the money back in the long run.
Okay. Now what about LTV or loan to value?
Yeah.
Is there a certain percentage? Maybe just talk a little bit about that if somebody's listening and they don't know what that means.
Yeah. I have had my lawyer in some instances look over the value of the property. And there was one case where someone had refinanced, I think 3 or 4 times in 5 years. So it's questionable how great that loan to value would be and how much equity is in the property to pay me out. But one thing that I learned from another investor is that she loaned actually to one of her investing coaches, I think $100,000, and the bank foreclosed on the property. And even though there was ample equity in it, the bank charged $250,000 in fees over and above what was owed, and it eliminated her ability to get the money out. So I think that was obviously like a good learning, that even if it looks favorable, you've got to be mindful of where you stand in line for payments owed and stuff like that.
Okay. Now I do want to go back here. We're talking about the numbers. Mm-hmm. Okay. So let's say now where everything is right now. So your HELOC is at 8%. Mm-hmm. You find a deal at 15%. It's $100,000. Yeah. Okay. So how do we go through that math? So you lend out that $100,000. Mm-hmm. Okay. So we know the spread now is 7%. Mm-hmm. So we take that $100,000, multiply that by your 7%.
Plug in like 8,400 or something.
7, where's my percent? Equals 7,000. Mm-hmm. All right. Divide that by 12. And you got a cash flow of $583 a month.
Yeah.
Not bad cash flow.
Yeah.
Especially with where the market is right now.
Yeah. And the way that it was, like for the other investments I did that didn't cash flow, the private lending literally paid off those other opportunities. So it'll be like a nest egg when they mature, because it's always been more than I've actually needed. So I just keep the money out there working, and I don't just go out shopping. Like I've just used it to pay off other investments.
Right. So the pros and the cons. So the pro is good cash flow. I guess the con would be, though, you're not getting any mortgage pay down, or you're not getting any appreciation.
There's no long-term equity. So my plan was always, what I have in my business would ideally be to build my portfolio. I did dump some of that money into private lending for the year just so it could be making money while I figured out what I wanted to do. But my plan is that ideally, if I can grow a multifamily portfolio to a certain size with the business retained earnings, and then I have, access to my HELOC and other things, that I have everything else going on for cash flow.
So that's where you're moving into next, and into the multifamily space. Okay.
Yeah.
So walk me through, how do you get in that? Because a lot of people are like, okay, cool, I like the private lending stuff.
Yeah.
You're getting some good cash flow. How do you move into the multifamily space now? Because are you going to be raising capital?
Yeah.
It's difficult to just do this thing on your own. And what size are you looking at?
Yeah, I think that's one thing I really learned, as much as I've been on the other side as a lender, just how few investors use their own money to buy things. But my intention with this was it would be my money. So I was looking at something in the range of maybe 1.5 to 2 million, ideally in Alberta or New Brunswick. So areas that the values are a little bit lower, you've got the opportunity to cash flow. I think what I've decided is that, why would I struggle through this on my own when there's people that have the systems in place, they've done this before, and I've narrowed down a few different possible JV partners that if they can take a property, improve the potential of it, you can take that money back out, usually probably in a year's time or even 2 years' time, and then keep recycling that capital, and then you're growing your portfolio and improving your cash flow. Right. So I think I've decided, I've explored a lot. I looked at short-term rentals in Arizona, Tulum, Costa Rica, just Florida, things kind of all over the place. I looked at midterm rentals in the Southwest. So areas where you can buy properties for maybe 100,000, 150,000. But I think I decided if it would probably make sense, if multifamily makes the most sense for me, just a joint venture with someone that's already doing it.
Right. Okay. So partner with an expert, somebody who's got property management, potentially even on site. So you're not going there, you're not cleaning toilets, you're not doing any of that work.
To borrow multifamily in another province, to struggle through that on my own, people are doing it, but I was like, why would I do that? There's people that really, they can do it a lot easier than I do because they've already built their team, they have the systems in place and stuff like that.
Yeah. I think people forget or don't realize the power of leverage, not only just on their money, but also with people.
Yeah.
And then leveraging experts. I think of, even this, the brokers that I'm part of here, man, there's pieces and parts and components that move that I have no clue on how it works.
Yeah.
But I've just partnered with people that are experts in this particular space and confident that they can hire the right people to do the things that need to get done.
Yeah.
It's no different. I've also got a private lending company as well too. I don't know shit about it.
Yeah.
But
I've
the partnered,
people do.
Right. But they're conservative. I know that they're doing the due diligence, and they're putting our investors into opportunities that make sense, and it's going to do well for us and for our investors.
Yeah.
And I think that's the key. So what you're doing makes so much sense. And I think people think that they've got to try and do this on their own.
Yeah.
And that is, I say this all the time, I've never met a rich hermit.
Yeah.
Right?
Yeah. And that's the thing. Like I said, if I knew then what I know now, I probably would have a bigger portfolio because I would have made different decisions with some of that information. And now that I am part of a mastermind with 65 other investors, and a lot of them are more active. So they're doing land assemblies, land development. A lot of them have portfolios kind of all across the country and into the States. So I've been more on the passive side, but why wouldn't I leverage that? I'd be silly not to. Yeah. So.
Yeah. And it's about what room are you in? Yeah.
Yeah.
So tell me a little more about this mastermind.
Yeah. Yeah. So they weren't really on my radar completely, but one of the people that founded it spoke at my first event that I went to 5 years ago. And he's like, hey, do you want to join with us this year? And I was like, well, I actually just took all the money I had and put it into private lending to figure this out. And he's like, well, that's okay. You don't need your own money. A lot of people raise money. So this can expose you to different concepts or relationships where you might completely change your outlook and your strategy and stuff like that. So I signed up with them, and they have 4 calls a month over the span of 10 months from September to June. So they have an expert speaker Best in Request, a roundtable, and a social call. So some of our expert speakers have been like Chris Crone. I was trying to even think like Beardy Brandon, like from the Bigger Pockets podcast, like some pretty big people
names,
that you actually have them for an hour. They talk, you get to ask questions and stuff like that. Vina Jetty, so she's actually going to be on our board of advisors. She's got $1 billion under management, and she's a big syndicator from Atlanta. And then we also have 3 trips where we travel together. So last year we went to Quebec City, Cancun, and Victoria, and they would, have programming for the entire weekend. And then all the speakers actually stay with us for the entire weekend as well. So when I went to Quebec City, I just thought Vina Jetty was actually a member, and we're just chatting and having dinner together. And then I found out who she was, and I was like, oh my gosh, I didn't know, because the weekend hadn't even gotten started yet. And I didn't really know anyone at that point in time. But, for someone like that we're the same age, but she's got like $1 billion worth of property under her management. So.
Yeah. And when you start hanging out with those type of people, they can't help but rub off on you.
Yeah.
Right. And just to be able to be in a room, to be able to ask them questions, to hear their stories, and maybe even some of the struggles that they went through.
Yeah.
But now that helps you to fast forward your journey.
Exactly.
They're like, oh, okay, I was going to do that, but I shouldn't do it that way. I should do it that way.
And figure out how to go about it, right? Because everyone knows what people are doing. You can talk about that, but how did you actually do that? Right. And even with Vina, for example, she shares a story of being at Home Depot where she was asking someone for something. Turns out the guy, he's retired, but he's got a decent amount of wealth, but he still just wants to be doing something. And then he became a client and she was asking for like a tool, just you never know who you could end up working with, and just having that open mind and that outlook.
Yeah.
So it's interesting to hear about their stories, but a lot of concepts I'd never heard of before, like wholesaling or infinite banking, and, all of these different ways that you could possibly grow your wealth. And, they just try to touch on different topics. So they're not really educating you to teach you, but they open your mind to them. And then if you want to pursue them, that's obviously up to you to figure that out.
I know I did a podcast with my accountant. I'm like, hey, so how long has this infinite banking been around? Like, like a few years, 10 years? Like, yeah, thing's been around for hundreds of years.
Yeah, like since like 1842 or something, right?
Yeah, it's crazy.
Since before the country was like around.
How come I never heard about this before, right? But it's as you grow and you start to hang out with the right people.
Yeah.
What have you learned that's been a huge game changer for you in these mastermind groups? Like, what's really some of the things that you've picked up on and said, man, that's incredible?
Yeah, I mean, I think obviously people are doing some pretty amazing things within the group and stuff like that. But I think what's become clear to me is that over this past year, because I've shared more about my experience and stuff like that, a lot of people keep coming to me now looking for opportunities. So I think one of the things that I would like to pursue is getting a seat at the table as a general partner where I could capital raise. Because if I have shared opportunities with people in the past, and now I can say, this is actually my opportunity. And, these are the benefits and advantages and stuff like that. So I'm just looking for the right partnership where I could come on board in that capacity, where I can build some additional equity and wealth in that way. Because I don't think I'm going to just try that on my own. But if a company is looking to scale and they want that additional support, maybe that could be an avenue for me.
Okay. And when you say capital raise, what do you mean by that? Like, you're obviously raising capital. How are you doing that?
Yeah.
How do you even have those conversations? Because people hear it and they're like, I don't know if I can do that.
Well, a lot of them will raise basically private money to buy properties or to do land development and stuff like that. So I'll share one example from someone in my mastermind that bought a 40-unit student rental in Waterloo. And they're going to take it to site plan approval over the next 2 to 3 years. And it's going to be rezoned to 35 stories. So there will be the opportunity to exit at that point in time for all the investors. So basically they raised investor money for the down payment on the property, traditionally financed the rest. It's closed, it's cash flowing. It will still operate as a student rental now for the next 2 to 3 years. And then once they have that rezoning approval, they can either sell it to a developer or they could potentially take it to the next step.
Right.
But they've offered investors, I think it's anywhere from 36 to 38% annual compound interest during those 2 to 3 years. So I put, $50,000 from my TFSA into that deal, and it will probably double during that period of time.
Crazy.
So you would take, I don't know how many people they needed for that down payment, but you're obviously coming up with those numbers. Their worst case scenario for profit on that, just to take it to site plan approval, was low case was like 8 million, and on the upper case could be like 24 million.
Isn't that crazy that all these things are being done in behind these small kind of backroom closed doors,
Yeah.
And it's, I guess sometimes you say it's fortunate or unfortunate, really unfortunate that the mass don't even understand or know this, or they're not searching for it, or they don't know where to look to find it.
Yeah.
How do you find these things?
Well,
if somebody's listening, like they're just brand new, and like, how did you find this group, Serena?
Well, I mean, they approached me. The mastermind approached me, and then they have all these different members, right? So I've gotten to know, obviously, all the members over the last year quite well.
But I think also, too, they approached you because you also put yourself out there.
Yeah. I mean, what I did was, because when I got my real estate license, I couldn't say I've sold all these houses. I didn't even have clients. So I was just sharing a lot of other people's content that I thought was valuable. So whether that was investing tips or beautiful things about design or whatever it was. So I got on their radar just by sharing their content. So it kind of came full circle, because I had met Darren 5 years ago, and then now he launched Mastermind, Synergy Mastermind, in the last, I guess now we're going into year 4 that they have. But it put me on his radar, where otherwise he wouldn't know who I was.
Right.
Yeah.
Yeah. So you're sharing their content. You're also liking, because I see that you're active on social media. Do you think that's been a huge part of your success and the people that you've met along this journey?
Yeah, I think so. I think just always trying to, provide value and get on people's radar. It's the quickest way to probably get noticed if you're like commenting on stuff.
Yeah.
But I think just going back to your point about land development, like right now we have this housing crisis and there's this shortage. So what makes the most sense is land development. So if you can really understand those opportunities and find those opportunities, I think that's where you're going to find the most opportunity for wealth. So in this case, they found this student residence building that's surrounded by all these high-rise student residences. And then when they explored the zoning, they saw that they could actually rezone it to a much higher potential. So I think it's just trying to know the law and trying to identify those opportunities, whatever they may be.
Right. And also too, again, going back to partnering with the right people, understanding like, okay, I've got this piece of land here. What's the zoning? Can I change the zoning?
Yeah.
And really all essentially you're doing is you're flipping paper.
Yeah. Yeah.
You're flipping paper and picking up some phone calls and going to some meetings.
Exactly.
And then getting it, you're creating, what would you call it? Higher and best use.
Yeah. And with land development, there's obviously a lot of different opportunities to exit, right? So whether that's just like a severance or it's site plan approval. So that it doesn't mean you have to build a high rise. There are these different opportunities where you can exit, and they're already talking to developers to see if like what they would want for it, or if they're going to continue along and maybe have a partnership with a developer. Because obviously then their margin will probably go from like that 8 to 24 million to probably like, I don't know, 75 to like 100 million, right? So if they have it in them and they find the right partnership, maybe they'll take it that step further.
So when you first kind of heard it all, like land, severance or assembly, did that sound like really scary to you? Because I'm sure that sounds very scary to a lot of people. Like, oh my God, no, that's too crazy. I don't want to get into development.
Yeah.
But you kind of broke it down where, well, you don't have to develop it. You just have to bring it to the point of being ready for development.
Yeah.
And then let the developer come in and like, oh, okay, thanks for doing all that work for me.
Yeah.
I'll take it from here.
Yeah. I mean, I met another company that I had invested with that kind of came highly recommended, but I finally actually met the owners in April. So they have 2 land assemblies, one in Waterloo and then one in Dieppe, New Brunswick. So basically building apartment buildings. And, basically they have to raise $3 million of investor capital for the down payment. They'll do 90% CMHC financing on the rest, which is another 27 million. So 30 million upfront. And when it's done, it'll be worth anything from like 90 to 120 million. And that's the estimate
So
currently.
wild.
Could be more, right? So you can imagine, and they looked at it from the standpoint of like, they've got this huge portfolio now. Multifamily's been a lot harder to handle in some ways, just because there could be delays and escalating costs and like labor shortages and stuff like that. And they're like, their opinion, land development's a lot easier than borrowing a multifamily property. So I think they're going to redirect their focus and just go into that.
Right. What have been some of the biggest mistakes you've made in your life, and how were you able to overcome it?
Yeah, I mean, there's definitely been lots. But
Join the club.
yeah, I mean, when I had my business, like I tried to actually build our own software platform. And part of it was just to automate the way we collected availability for scheduling, because we were scheduling people that was like a huge bulk of our business. And we couldn't find an out-of-the-box solution. Like we interviewed with 50 or 60 different software companies and no one had what we really wanted or really needed. And So I took out a loan from the bank and I spent $65,000 building a software platform. And when it was done, we just couldn't get the staff to actually use it. So that was one issue. Like adopting it was a big problem. And then there were certain functions that weren't working. So we were going to have to spend another, 30 or 40,000 to take it really where we needed it. And I was like, it's already been 2 years, already been more than it should have cost. So we just shelved it. So that was a big learning. Like I looked at it like it's a risk. I know it's going to cost money. It's going to save us a lot of time. It would cut on my management time if we really get this going. But building software is not easy. It's not not to say faint at heart, but it's tedious is the best thing I could say. Right. So you really want to make sure you want to do it if you're going to do it. So that was one big challenge. I think just trying to think other mistakes. Yeah. Just
what about the last year?
I think just trusting your instincts is a big thing too, right? Like I think with the deal I mentioned that I'm struggling with right now, there was a couple things with the communication with the broker that I was just getting a bad feeling about it. But because I'd worked with this borrower in the past, I'd worked with this broker for a long time, I just ignored it and I gave them the benefit of the doubt. And then now I'm kind of in this situation where I'm dealing with it. And I think I just should have trusted that feeling at that time.
You're talking about your gut instincts.
Yeah, absolutely. Yeah, just don't ignore them.
Yeah. Were you tossing and turning or just kind of
No, it's like I just had a feeling. I was like, there's just some things like when I was asking questions, there was stuff that the answers didn't really make sense. And I found now looking back, some of the stuff was actually incorrect,
Yeah.
So I just, you got to learn to trust your instincts for sure.
But I mean, you learned from it now. Right, like you see where it went wrong and why it went wrong.
Yeah,
and okay,
I still protected myself. Like I think I did the right due diligence to protect myself. Nothing would have changed that. But I think really trusting your instincts, and I think for anyone that's considering investing, especially when it comes to lending, is just diversify as much as possible. Like I try to do no more than a certain amount per deal, and I would rather work with 20 different companies and people rather than 2, because you just never know if something might go wrong. I
agree. I think that's a really good advice, right? Just to kind of diversify. But you're talking about diversifying though within deals, within real estate investing that you're good at.
Yeah.
Right. I agree. As opposed to like jumping into different things like stock market or this or that, right? You're saying focus on real estate investing, but diversify within that space. Yeah.
Diversify with the number of companies, diversify where they're located, like what they're actually doing. Like, I work with people in various capacities within real estate. But what I like is that, there is a tangibility with real estate that you won't see in like mutual funds or the stock market or crypto. Like you have no control at all with any of those things, right? Where I think with these particular projects, the investors will share like updates on what they're doing. You can see it. You can potentially go buy those properties in some instances, right? So that's one thing that I've really liked about it compared to other forms of investing.
I feel like I have more control over it.
Yeah.
And I understand it. I mean, obviously it takes time to really kind of do your due diligence and to really get in, to understand real estate investing. It's taken me many years. And listen, I'm still scratching the surface, scratching the surface, but I definitely feel like there's more control over it. Let's shift into a little bit of the mindset. Is that important to you?
Yeah, I mean, I think it is. I'm not someone that sits there and meditates every day or anything like that. We had a speaker at one of our events and he talked a lot about how trauma can come out in everyday life now. And he's got a certain approach to it. And I don't know, like sometimes I just feel like some of that stuff's a little hokey for me. Like I just, personally, it's not my cup of tea. Or even like Tony Robbins, like I think he's amazing, but do I want to jump around the room and give massages to strangers and walk on fire? Like I just don't need to do those things. Like, so everyone's got their own thing, but I do believe in just being positive and, I think you have to have a certain outlook to take on opportunities. Like you can't have a can't do attitude and be successful. So I think it still helps to frame your mind and be open to things. Like if anything, like I've always just been open. Like it doesn't hurt to at least have the conversation and explore it. Where some people like won't even talk about it. Like they'll say, "Oh, I'm interested." Then you go to have a call and like they've disappeared. Yeah. Right. So I think you have to have a certain open mind. So whether that plays into mindset completely, I guess. It all depends on how you look at it.
I think I understand what you're saying, because there are some people where they will say, well, the universe will provide for me. Okay, but you still got to work. You still got to go and take action. You can't just wait and, oh, well, hold on, it's not the full moon yet. Listen, man, okay, maybe.
Like some people have those superstitions, right? Or and again, with meditating, my mind is just too busy, right? So when they're like, just still your mind. I'm like, I can't. I would try. I can't.
Yeah.
So it's just, it works really well for some people. But for me, it's, I would process things better by like thinking it out or writing it out, say even like writing an email to someone, even if you don't intend to send it. That's why I wrote a book. Like it helps you process all of these different things, right?
Okay. Yeah. So you're not waiting for the right month and the right lighting from the moon.
No.
And, maybe dive into the water and hold your breath and then say, okay, now it's come. Okay. So you're just taking action.
Yeah.
You're figuring out what you want and doing it.
Yeah. When they say like you research slowly and then you decide quickly, like you'll take the time and talk to as many people as you need to and do your due diligence and then take action. You can't just, wait for 20 years for the perfect time.
Right. And listen, for all the moon lovers out there, I'm not knocking it. I'm just saying it's just, some people, it works for them and other people, they just go ahead and do things and they're not concerned with it. So continue doing things based on the moon. Okay, guys? If that's what you like doing. I'm not knocking it. What books are you reading? Or what podcasts are you listening to?
Yeah, I have a big stack. I'm actually, I think having a 3-year-old, like it's pretty exhausting. So I have a stack of books that I've bought in the last little while that are literally on my desk.
Isn't it hard to get through it sometimes though? I try to.
Yeah.
I find audio works for me, but anyways.
I'm a big I love reading and I can read very, very fast. So I actually bought even a couple books when I went to Victoria in June and I read them in like 2 hours. I can get through things very quickly, but I think just having a 3-year-old fatigues me. So I do have a couple books on infinite banking that I want to make sure I go through those in more detail. I've got Robin Sharma's like 5 a.m., like the 5 a.m. club or something like that. I've got like,
do you wake up at 5 a.m.? Do you
if I'm lucky, I wake up at like 4 most of the time. So
really?
I'm a very, very early riser.
Okay.
So
and you go to bed at what time?
Usually like 9:30.
Okay.
Yeah.
Okay.
Yeah, so it just got earlier and earlier, like the older that I've gotten. So
don't you find though you get so much more done at that? Like, are you okay? Walk me through your morning. Like, what does your morning routine look like?
Yeah, so I was part of a group called the Executive Council when I had my own business, and we had a neuroscientist speak about brain cell loss. And I'd always like to work out, but it was always inconsistent. Like if work got busy, I would maybe not work out for a month because I'd be working instead from the moment I woke up. And he basically said that we lose these brain cells every single day, but the only way to not only, avoid it from having a bigger impact and also replenishing them is by working out. So ever since I had my daughter, I've been very, very consistent. Like I think I've only missed a couple of weeks a year since she was born, since she was maybe 4 months old. So I always work out in the morning, like at least 5 days a week. Have a home gym, so it's easy enough to do that with her obviously being home. And then just getting ahead on some of my social posts so it's out of the way before the actual workday starts. So I'm not just sucked into social media like when I should be doing other things. So usually those are the two things I try to tackle first thing.
Awesome. What about emails? How do you handle emails?
I'm like an email Nazi, if I can say that. like I just don't like to have anything in my inbox. So if it's there, it means I still need to deal with it. So once I've dealt with an email, it's immediately filed. So I never really have any more than a few emails at a time. Like I always just deal with it as soon as I can, or if I can.
So as they're coming in, you're dealing with it, or do you kind of batch it?
Usually like as they come in, like when I used to have my agency, like I would try to batch it. So I'd do like an hour at a time. Like I never want a client sitting there wondering why they haven't gotten a response or anything like that, but they would never hear back like a day later or something like that. Like it's always been very, very quick. Yeah. And what we learned is just we booked so much business that way, like by being the first company to acknowledge an email, the first one to quote on business and stuff like that. So I think I've always just prioritized urgency and getting back to people as soon as I can.
Yeah. So it sounds like you've got good systems in place.
Yeah.
Right. What's your superpower?
Sounds silly, but organizing. I think I always think I'm not organized enough, but I do like to have things like very, very organized just so that I feel like it makes you more efficient, more productive, right? Like I feel like sometimes I see people's desktops or their emails and I'm like, how do you get anything done? I like to keep things very streamlined and just make it easier.
Yeah. Okay.
Yeah,
So you're
not exciting.
No, but you know what though? But that's an important part though, right? Of I think success there's got to be some type of organization, systems, processes. I know when I left the corporate world, I was able to take some of those systems and processes, and even at the time when we were doing it, at TD, I'm like, why are we doing all these meetings, or why are we doing these reports? Or you know what? taking that and moving it into a small company when we first started was so important, because then now you can actually analyze and see the trajectory of your business, and are you going down the right path? Are you going down the wrong path? Let's have some meetings. Let's talk about partners. And having all those systems and processes in place makes such a big difference as opposed to just winging it.
Yeah, absolutely.
Yeah. So what's next for you?
Yeah. So I think now that, again, my daughter's at her school age, I think I'm going to be focusing a little bit more on trying to get clients that are closer to home. So I'm in Pickering. So ideally, I want to focus on Durham region. I did find, like, with my agency, we had clients that were literally all across the world in some instances. Like, yes, a lot in Canada, a ton in the States, but even like Europe and Australia and all over. So it's not like I can necessarily obtain them all as clients when it comes to real estate. So I'm trying to find out what the best way is just to approach building up my clientele locally. So that's one side of it. The investing will continue to obviously be really, really big. So I think because of my approach with joint venturing, like, that probably won't take too much work for me. But if I can, get involved with some of the capital raising, that would, I think, be really fulfilling for me, because I feel like it's changed my life. So if I can pass that along to other people, that would be great. And then I also launched my own podcast called Inspired to Invest in June.
Yes.
So that's the other thing I've been obviously working on.
I'm excited. I'm going to be on your show, I think, in a couple of weeks or something like that.
In October. Yeah.
That's awesome. And how has that been? How's that been going?
Yeah, I mean, it wasn't something I thought of. Like, when I started going on podcasts at the end of last year, it was just to get in front of other people's audiences, to promote my book and to just demonstrate. Like, I can't say I've sold 1,000 houses, but I do have a lot of other experience that's, really relevant to still being a realtor. And then just by being on so many, I started getting asked to be on more, and someone encouraged me to start my own. And so for me, I didn't want to necessarily come across as like having these investors that are really elusive and intimidating. Like, I wanted to know where they started and how they got to where they are now, so that they can inspire other people to take action and take that first step. Because a lot of the time people won't have the confidence to do so. And I want to show them, like, this person was like a project manager at Nike. This person was building helicopters. Like, they could be doing all these different things. And then what that catalyst was to propel them into investing and how it really changed their life. So that's been great so far. And I've gotten some really strong feedback, even though we're only like 3 months in. I've been just, I think, sharing a lot of really diverse stories, and people have given me really great feedback.
That's awesome. Yeah. You know what? It's really nice to obviously talk to the experts, people that have done this for a very long time, to hear their story and their journey. But it's also equally nice to talk to somebody who is newer, because that beginning investor that's looking for, but I want to know, is it attainable? And I want to know somebody who has just maybe got 1 or 2 or 3 properties ahead of me to understand their actual real journey, because they're so much closer to it in that pipeline, right?
Yeah.
So no, that's awesome.
Yeah.
Great. So if anybody wants to learn more, but actually before we do that, what's one last piece of advice that you would share with somebody before we wrap it up?
Yeah, I think one of my favorite quotes is, "We rise by lifting others." So that's one thing that I always like. So I think just by, again, sharing those stories and building that community and stuff like that is so important, because it can feel really isolating when you're trying to tackle this by yourself. And the reality is you don't have to. Like, there is a big community out there supporting each other. Yeah.
That reminds me of a quote by Jim Rohn. Help as many people get what they want, and you can have every and anything you want. Yeah. So it's just about helping and sharing and uplifting the community and the people that watch and listen to you, right?
Absolutely.
Yeah. Awesome. It's been very interesting and fun watching your journey.
Thank you.
And thanks for coming in and doing this show with me. If people want to learn more about you, about maybe your mastermind group, or be a part of the capital raising that you're doing, how do they do that? Yeah. So I have a pretty active profile on Instagram. So under Serena Holmes Realtor, and it, shares everything from investing and stuff for homeowners to, stuff with the podcast. And then the podcast has its own dedicated page under Inspired to Invest podcast as well. Awesome. Yeah. Listen, I'm looking forward to having another conversation with you. Great. Thank you. All right. Thanks, Serena. I appreciate your time. Thank you. Awesome. Do you know what blockchain is? How about the difference between Bitcoin and crypto? After 15 years of explosive growth across the globe, it's important not to get left behind. We are currently in the mid-90s of the internet when it comes to adoption. Want to learn more? Make sure to reach out to onebitcoin.ca broker today. Whether you have basic security questions or you need help buying Bitcoin in a safe and convenient way. OneBitcoin.ca is here for you. Get started today with Canada's Bitcoin partner, OneBitcoin.ca.
Thanks for listening to today's show with Gary Hibbert. Please don't forget to subscribe, leave a review, and connect with your host on Instagram at Gary Hibbert. Until next time, stay mindful and remember, you don't have to be great to start. Just start, and you'll be on the path to being great.